Hi everybody, welcome to Forex.com's special NFP preview for July 5th with myself, Kathleen Brooks, Research Director here at Forex.com for ForexSpace.com. Well, this is one of the most hotly anticipated labour market reports for many months, possibly even years at this stage. All eyes over the last month have been on when the Fed will start tapering their asset purchase programme, and the Fed has been very clear. It's going to be dependent on economic data, on labour market data in particular, which makes June's non-farm payrolls report and the unemployment rate incredibly important. Now, the market consensus is for 165,000 jobs to have been created in the non-farm payroll sector, and for the unemployment rate to edge down a notch to 7.5% from 7.6%. But our prop model here at Forex.com actually expects much larger non-farm payroll growth for June. Take a quick look at this chart here. As you can see, we do tend to follow the overall Bureau of Labour Statistics readings quite closely. So our reading of 196,000 jobs is slightly on the upside. It is above expectations. But the reason why we think the job growth will be so strong is because of the components that go into our prop model. So we've seen ADP, the employment report. They measured private sector jobs for the month of June at 188,000. Likewise, even though there is a manufacturing employment subsection was weak, suggesting that manufacturing is the weakest link in the labour market chain in the US, we actually saw the service sector do incredibly well. So it's the employment section of that absolutely surged for June, suggesting that any weakness in the manufacturing is being made up for in the service sector. And remember, the service sector is a larger proportion of the economy in the US than elsewhere. We've also seen a continuing decline in initial jobless claims, and all of that is good news for our NFP. Drop in the unemployment rate to 7.5%. That would really keep the Fed's program of potentially tapering their asset purchases on track, and we could see tapering as soon as September, so as the end of this quarter. Now, what does that mean for the markets? Well, that should mean stronger dollar and rising treasury yields. But whenever you talk about the non-farm payrolls report and the labour market data in the US, you've really got to look at dollar yen. Let's take a quick look at dollar yen there. Dollar yen very sensitive to by labour market. If we do $9.20, the 50-day moving average, that looks like good support. But if we do get a strong payrolls number, then we could really get well above that 101 level. 102.50 is the high from over a month ago now, and that is a key level of resistance ahead of those 102 at the end of May. So overall, looking for a strong number from this month's NFP numbers, and if we get that, then we could see a lot of volatility in the FX market. Thank you for joining. Bye bye.